Welcome to Bears in Exile. Today is Monday, June 25th, and this is the market overview. Looking at the Dow, SPX, VIX, TNA, UUP, FXE, GLD, SLV, and all the rest. Okay. Alright, I think we're all set. Alright, well, the markets fell apart overnight. It was listed in the daily running thread. The global ES started falling apart, and a very bad sign for the markets overall. But although we were down big, it was also mainly a gap, which is not overly useful unless you are able to front run it. And today was supposed to be possibly the Obamacare decision, which did not come out. And according to the media, we're looking at Thursday now, which really stinks because, well, we'll get into that. Alright, starting off with the Dow. We had Friday, which was not a great showing, ending in the long-term moving average bar, backing away quite a bit from its high. And today, gapping way low, piercing the major price consensus level, but able to close above it. That's something. Beyond that, the daily chart looks terrible. Terrible. Everything is moving down with the exception of the 14-day RSI moving average. We don't really have an indication in the heat map that we're in a bottoming area yet, so more to come, which is agreed upon by the indicators. So, I'll just run through it real fast. Stochastics down, CCI down, RSI down, histogram down, MACD down. Ugly. Very ugly. And so, you might be saying, well, where are we going from here? Could we be going to a 200-day moving average test? Yeah, we could. Could we be going to a test of the bottom? I suppose it's possible. I think the most important thing is the current floor, right about 12,400. 100 points from where it is at the moment. And if that breaks, things are going to be probably pretty bad. But Obamacare. Got to be watching for Obamacare. Huge swing one way or the other. I don't want to be in front of it going the wrong direction. And really could be anybody's game with that sucker. And so, very tempting to short, but very dangerous. Very dangerous. 60-minute time frame. Here's where it gets interesting. Alright. You can see the massive gap down today. And yeah, it tried to climb back up. This looks like a bear flag, just like Friday. So could you play this going into Thursday, looking for consecutive stair steps down? You could, if you're really if you're really brave, but I don't know. I'm going to play it safe personally. 60-minute time frame. We can see the 14-day RSI moving average very low, has leveled out. You can see the stochastics trying to climb, CCI climbing, RSI climbing, histogram trying to climb, MACD even pointing up. Yeah, they're in a weak state. They're still on low, but which could be reset on a further drop down, entirely possible. But we have positive divergence. Slow stochastic, CCI, MACD histogram, pretty significant. That would give me reason to pause, personally. SPX, worse than the Dow. Big gap down, closed below the major price consensus level. And tried to come in for a test of the previous low, actually kissing the bottom of the candle from back here. Backing away slightly. And everything looks terrible. All pointing down. Good for the bears. No real indication of a bottom area here yet. So more to the downside? Yeah, it looks likely. Certainly the vibe out of Euroland is horrible, but 60-minute time frame, yeah, positive divergence, positive divergence, and that's it. Everything low and trying to climb. Doesn't mean that it's going to go up from here at this moment, but yeah, you could get even more severe positive divergence at this point, which would be pretty cool. I would actually, depending on what it looks like, it might be setting up for a huge pop come Thursday. So something to be very, very aware of. And here we are with the VIX. The VIX had another uptick yesterday. It resolved it today, getting above the very important $20 level. We clearly have a bottoming area here in the heat map, and it hasn't worked itself off yet, not completely. Everything moving up, good for the bears. 14-day RSI moving average still moving down. And what else is there here? Could be going up for a test of the 200-day moving average up here near 24. Could set up a series of lower highs if that's the case and it turns around at that point. But yeah, at the moment, this is looking pretty good. A weak candle today. Very weak. I was kind of surprised by that. 60-minute time frame. Now here, it does look really good for continued up movement, at least for the next few days, intermediate time frame, something like that. Series of higher highs, series of higher lows. But we do have negative divergence in the MACD histogram, and that's all we have. It's actually, that's kind of weak too. Everything high trying to click lower. So there is some overheating in the 60-minute time frame. I guess that should be expected on a big down day. TNA. Very weak. Doji Star outside the long-term moving average bar, closing below the major price consensus level after piercing it on Friday. Everything moving down. 14-day RSI moving average still moving up. No real indication of bottoming area in the heat map. It's probably how it's going to look on everything tonight. Possible bear flag. Bottoming area, however. And everything trying to move back up from a very low level, with the exception of the RSI going sideways. Positive divergence minorly in the MACD histogram and in the RSI and in the stochastic and in the CCI. Very tempting to trade, but Thursday. UUP. This sucker, the euro fell like a rock in the overnight, getting back down to the 1.25s, maybe, no, I think it even got into the 1.24s highs. So, big move down. Nice move up in UUP, was not strong after its big gap up, making a new recent high, putting us on the path to previous high at 22.9, and maybe even the previous ceiling, which we've talked about in the previous videos of everything looking good indicator wise, and that we would need to get to the previous high and see if it's a failed retest or not, at which time the 14 days should tell us the way. So no real change. FXE, we were talking in the previous videos about the need to retest the previous low. Indicators seem to indicate that. Everything clicking down, 14-day RSI moving average moving up. I mean, what is there to go over? We're kind of in a holding pattern until it, at least I am, until Thursday, and we'll see where these things end up, but it certainly looks like a retest of the low is in the cards. CompQ, the NASDAQ, closing below the major price consensus level. Everything pointing down, 14 days still ticking up. Broken record. I need to get into something a little more interesting. Everything looks the same tonight. Everything looks the same. XOY, when oil is bullish, market is bullish. Oil not bullish. And elections in Egypt, the Islamic guy won. Bad news for international stability. More on that will have to develop, but everything pointing down, with the exception of the 14-day RSI moving average. It's getting high. That rolls over. Terrible for oil. What else is there to say? Something interesting. Apple. Apple had a bad day. A really bad day. I mean, Friday we were saying how it had a good day, all things considered. And yeah, it closed below the major price consensus level today. We have the middle Bollinger Band going for cross. We don't have a signal for a bottoming area. Everything is starting to tick down. 14-day barely ticking up. Not healthy looking. It's not healthy looking. It's definitely not game over. We don't have a new recent low, but it definitely is not looking healthy. 60-minute time frame. See if there's some positive divergence on this one. And yeah, we do. We have minor positive divergence on the MACD histogram. Everything is really holding low, not ticking up like to the extent that many other things are. So I don't like that either. Just a bad day for Apple, chart-wise. And GE, maybe this can point the way out of here. I mean, I'm not unhappy about it going lower. I'm unhappy that Thursday's the day for Obamacare, and I can't do too much about this. Ending with a hammer, getting to the long-term moving average bar, bouncing off of it, and bottom of a possible pivot point, maybe. Everything moving down, 14-day RSI moving average ticking up, not looking good. 60-minute time frame, another possible bear flag, new recent low. But at least things are trying to get underway to the upside. So I don't mind the market going down into Thursday. Actually, that's a good thing. And if that happens and Obamacare is thrown out in its entirety, the pop is going to be monstrous. So really hope that if that's the case, we can catch a good portion of it. If it's upheld and we sell down bad into Thursday, whew, terrible. But then at the same time, they could say, "Oh, we priced it in already." So yeah, it's kind of a tough one if they keep it. GLD. Not a bad day. Fat body spinning top. 14-day RSI moving average holding high. Everything else, well, not everything else. Down on the histogram, down on the MACD, up on the RSI, up on the CCI, and stochastics attempting to begin a turn. Not overly bad, actually. Not bad at all. We have an uptick today. Uptick gives us a target of 155. which would coincide essentially with a bar retest, and since we have a new recent low, I would expect that to be retested at some point in the not too distant future. We do have warnings in the heat map about possible bottoming area. Had the hammer on Friday, so a little pop today, not bad. And SLV, ooh, scary. I mean, yeah, it had a good day. Today gave us an uptick. Uptick gives us a target of about 27.30. Nice 60 cents from here. But look where we started out, right at the previous bottom, and yeah, bouncing off that is fine until it turns around and it comes back to hit it again, in which case it probably breaks through it. 14-day RSI moving average is holding high. When that turns, it's going to be really bad. Up on the CCI, up on the stochastics, up on the RSI, up on the histogram, up, not up on the MACD, ticking down. There isn't too much to go over tonight, so I'll just hit XLF and call it an evening. Financials, lead us up, lead us down. Gap way down. Kissed the major price consensus level, backed away slightly. Breaking the previous low in the 200-day moving average would be a really bad sign. Tiny bit of indication in the heat map that it's a little overdone, but everything moving down with the exception of the 14-day RSI moving average. Could be a few days for the secondaries to get low enough that they can turn, and depending on the news, Thursday, they could be set for a turnaround and go up to meet the 14-day RSI moving average. Just so much to consider, and yeah, it can make a lot of money, but if you're on the wrong side, ooh, going to get ran over. So I hope everyone is really careful this week, and I'll be updating the daily running thread, but be kind of limited unless you're doing an intraday scalp for wanting to hold into Thursday. As always, all investing decisions are your own. This chart and video for entertainment, educational, and consumption of time purposes only. Thank you.